Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Ekta Batra. Ekta, we are seeing a bit of a sell-off from higher levels. Markets at record highs, but we are starting the Midcap show on a bit of a red note today.
Hi, Vivek. Yes, absolutely. You know, we had a little bit of disconcerting information when it came in from the US CPI data from the US. So definitely there is some amount of trepidation which has come in. But the mid-caps have been choppy. They've recovered from the day's low, but nonetheless absolutely flat at this point in time. So we have a lot more ground to cover, at least till markets close. So let's see whether there's any kind of improvement and buying which comes in for the broader markets especially, and whether there's any improvement in the advanced decline ratio. These are the top stories that we're tracking this afternoon. Uncertainty over the US Fed Reserve's interest rate trajectory keeps stocks soft, but range, pharma and FMCG are the weak spots. Auto and energy eke out gains. Mid-caps also trade in the red but fare relatively better.
Syngene and Newland Labs surge on the back of a positive note from Goldman Sachs. It initiates coverage on both of the stocks with a buy call. Says that pharma R&D outsourcing target addressable market of almost $200 billion and they see double-digit growth going forward. On the other hand, Laurus Labs slumps after Goldman Sachs initiates coverage with a sell call and a target price of a little of 350 rupees a share. They cite that they see unfavorable risk-reward ratio on the lack of catalyst for the CDMO business in calendar year 2024.
Okay, Entero Health rallies after brokerage firm Jefferies initiates coverage on the stock with a buy call and a target price of 15.10, citing that the company would benefit from industry consolidation. The firm adds that the company should see 20% organic CAGR over FY24 to 26.
Credit Access Grameen surges after brokerage firm Goldman Sachs initiates coverage on the stock with a buy rating with a target price of 1,788 rupees a share. They believe that the company will do quite well going forward and has demonstrated a good track record through the cycle and also forecast a healthy 21% profit CAGR over FY24 to FY26.
Bharti Hexacom makes a strong debut on the exchanges, listing at a 32% premium at 755 rupees a share versus the issue price of 570 rupees.
Well, good afternoon and welcome to Midcap Radar. What we're actually essentially seeing at this point of time in the market is that, especially if you look at the midcap stock and the midcap index over the last half hour, last 1 hour, you've seen quite a bit of a sell-off emerge. Remember, the midcap index, the small cap index, were continuously gaining for 11 to 12 trading sessions, post which they are, in the couple of sessions ago, you did see a brief selling pressure. But on Wednesday, once again, both the mid-cap and the small-cap index managed to scale record highs over there. Today, we are seeing a bit of sell-off emerge in the last hour of trade. We did see some negative cues coming in as far as global markets are concerned. And despite that, markets opened quite strong. Mid-cap index, small-cap index opened in the green. But right now, we are seeing a little bit of selling pressure emerge.
Okay, all right. Well, let's get to our segment Mid-Cap Movers now. We have Hormuz, who is here to take us through the mid-caps that are moving around in trade this afternoon.
Slightly choppy, as you highlighted this afternoon for the bulls, and we are heading into a weekend, another truncated week coming up as well. So the bulls are taking a bit of a break after the move that we have seen over the last few trading sessions. But as always, there are certain stocks that are in a world of their own, regardless of what the market is doing. We'll start off with Quest Corp, 6.5% higher, the top gainer on the mid-cap index, and as is Concord Biotech, 5.5% higher there as well. Sona, BLW, Delivery, Credit Access Grameen on that positive brokerage note from Goldman Sachs, doing very well for themselves in today's trading session. What is also doing well, though, are stocks that are linked to the market, and those stocks will come up on your screen now. But before that, some positive brokerage commentary, as we highlighted. Newland Labs now on the highest point of the day, 10% higher. Syngene as well, and Laurus Labs is now at the day's low, 3% lower after that negative commentary coming in from Goldman Sachs. But as I mentioned, the market may not be doing well, but the market-linked stocks are doing very well for themselves, and CDSL is one of those names that is 7% higher now after that note from HDFC Securities, which is projecting the stock to hit up to as high as 2360 going forward. And CAMS, after the payments aggregator license that it won, is up 4% in today's session as well. Some other stocks that are doing very well in today's session, and those will come up on your screen now. Cable stocks as one sector that's doing well, that has continued to do well over the last few sessions. KEI Industries leading the pack today, 5.5% higher. Polycab and RR Kabel also doing well in today's trading session. Some volume buzzers numbers will come up on your screen now. Those stocks gaining on the back of high volumes. Metropolis off the highest point of the day, but still 3% higher, as is Jubilant and Gravia. And chemical stocks doing very well. Arkin Chemicals now 6.5% higher, and IRCTC at the day's high 3.5% higher, but on very strong volumes. And lastly, stocks that are not doing well in today's session, some of the underperformers, and Spark continues a second straight lower circuit for the stock after Wednesday. PB Fintech seeing a bit of profit booking, 4.5% lower there. Vodafone Idea after the FPO, and Page Industries after last week's stellar move is down 3.5% in today's trading session. Back to you.
Thank you so much for that, Hormaz. You did mention CDSL is one of the top movers. We'll discuss that particular stock in greater detail later on. Spark also is one stock down, hitting a lower circuit for the second straight session. We'll get some insight on that as well later on during the show. But let's now welcome Nagaraj Shetty of HDFC Securities for a technical check on the market. Good afternoon, Nagaraj. What is your call as far as the indices are concerned? Are we seeing a bit of exhaustion at higher levels?
Hi, good afternoon, Vivek. Market has been in a sharp uptrend. We have seen Nifty forming a new all-time highs. I think this is a running correction. This is not red flagging the market as in terms of a reversal. This is going to be a healthy correction at the lower levels around 22,300, 350 is going to be a good support for the market. I'm expecting Nifty to bounce back from the lower levels. On the other hand, if you look at the broader market indices like Midcap and Small Cap 100, they are in an amazing rally. We have seen mid-cap and small-cap outperforming the benchmark Nifty in the last few weeks and currently placed at the higher levels. I am expecting upside momentum to continue for this mid-cap. Any further consolidation is going to be a buy on dips opportunity.
Okay, all right, fair enough. And stocks, what do you like?
Yeah, I have a couple of stock picks from the mid and small cap segment. First time, as you discussed, the CDSL, actually we have recommended from our fundamental side. And technically also, it has been in a great pattern. The upside breakout of the consolidation currently trading around 2008. And technically, I'm expecting this to move towards the 2150 levels. One can look to buy at this point of time, and one can place a stop loss at 1900. Second one is the Heikel. Heikel was moving in a range bound action in the last couple of sessions after a sharp up run. Currently placed around 3130, 302 levels. One can look to buy at this point of time. Overall long-term chart setup is positive, and I'm expecting this to move up further. 320 is going to be the immediate target for this stocks, and one can place a stop loss at 290.
Thank you so much for that, Nagaraj. We'll watch out for both CDSL as well as Heikel, both of your top picks. Earlier today, we did speak to Tahir Badshah, the CIO of Invesco Mutual Funds, to discuss his outlook on the market fundamentals. Listen in to what he had to say.
I don't know about a lot of pressure, but I think there should be some pressure. There's quite a possibility because some of the macros have now started to once again unravel, and market will try to kind of once again get into that debate a little more aggressively with regard to whether it is interest rates or the geopolitical scenario and even our own political election-related outcomes, etc. So we're getting into the thick of that. There will be interruptions, punctuations, etc. along the way, driven by some of the macro indicators. But I think the larger and the more stronger focus will probably remain on how the earnings trajectory manifests itself. There have been expectations that there will be a slowdown as far as, or at least a deceleration in the momentum of new order flows, and probably some execution-related delays as well as we get into the thick of the elections. So I think that again is somewhere there in the mind of the market. We'll have to see as to what does it do to the shorter-term earnings growth over the next 1 or 2 quarters, or the top-line growth more importantly. I think the important thing also will be, like as I said, earnings delivery, and markets will look forward to some of those important stalwart segments like industrials, autos, oil and gas-related companies, which are supposed to deliver strong earnings. Do they continue to deliver on that promise? And there are value opportunities, perhaps a little more in the large cap IT names compared to the mid caps. And for some of our value strategies, we don't have a choice but to kind of look at some of those a little more. And especially if we can live with some of the softness that we are likely to see in the next quarter or so. But if we believe that during the course of FY25, the base will start becoming a little more attractive for them, things can start falling into place. We can probably use the valuation support to be able to kind of buy into some of those names as well. But overall, at an aggregate level, I think it looks like from most assessments that IT budgets are likely to be flat for calendar year 24.
Okay, so that is some market opinion. We need to take a short break with the news that the markets are sluggish. Up next, we'll be talking about CDSL in our mid-cap spotlight segment. Stay tuned. Welcome back. Well, like we've been pointing out, it's a dull day for the markets. We have the Bank Nifty, which is down around 0.8%. We have a couple of stocks which are, however, managing to hold their head above the water. So Delivery is doing well in today's trading session. That stock is up around 5-odd%. We have a little bit of buying, which is coming in for sale. That stock has rallied around 25% this year, so it's seeing some amount of gains. NHPC is marginally higher. IREDA is building on its 64% gain for the year. So that stock is up around 1.3% at this point in time. But let's talk about Bharti Hexacom, which has made a decent debut on the exchanges, listing at a premium of over 30% versus its issue price. Reema is here to tell us more about this particular listing.
Thanks so much for that. So strong listing gains of 32%, and the gains are only getting stronger on Bharti Hexacom. The subscription too was strong at close to about 30 times, and its anchor book boasts of some very, very marquee names. Now, quick word about the company. This is a company which provides telecom, the wireless services, but in two circles, Rajasthan and Northeast. Rajasthan accounts for 78% of the overall revenues. In Rajasthan, it's the number 2 player. In Northeastern circles, which includes the 7 sister states, it's the number 1 player with a market share of more than 50%. Promoters hold 85% stake in the company, which is Bharti at 70%, and 15% is owned by the government under the entity of Telecommunications Consultants India Limited, TCIL. This is a company with a revenue of about 6,500 crore plus last year, margins expanding to 49.35% as of the recent numbers, and ARPUs inching to 200 rupees. JM Financial too has initiated coverage in the stock with a buy rating and a target price of 790, and they believe this is a company is a pure mid-cap play. If you want to play India's wireless theme, if you want to play India's increasing ARPUs, the premiumization, the move from 2G to 4G, then this mid-cap company is the company for you. Because there is Bharti Airtel, but Bharti Airtel also derives value from other businesses like the enterprise business or the Africa business. So if you want to play India's structural ARPU increasing story, then Bharti Hexacom. So according to JM Financial, Bharti's ARPUs are likely to compound at 10%. Rajasthan and Northeast are high growth markets because of low penetration. The teledensity is low. Very fewer subscribers have other high ARPU subscribers. So they expect Bharti Hexacom's EBITDA margins to expand from the current 49.35% to 57% by FY30. In fact, the EBITDA CAGR growth of this company will be higher than Bharti Airtel's pure wireless EBITDA growth. Back to you.
Thank you so much for that, Reema. Very interesting debut. It's a strong debut, over a 40% pop that the company is seeing as far as day one itself is concerned. On day one itself, you have a Brokerage, that's come out with an initiating coverage note with a buy rating on the stock. And along with that, actually what's happened is that it has also had a rub-off on other listed players. So if you look at a name like Hexacom, that particular stock too is doing quite well. Remember, Hexacom also was a recent listing. But moving on, the next stock that we will focus on is CDSL. CDSL has surged over 6% as HDFC Securities remains bullish on the stock. They maintain their buy call with a target price of 2,360 rupees a share. In our segment, Midcap Spotlight, Vamakshi will focus on the stock. Vamakshi, over to you.
Well, absolutely. CDSL definitely on our radar today, and that is because HDFC Securities has come out with a report on this counter. They have highlighted that one of the triggers for this company is that compulsory dematerialization of insurance policies will be opening up new opportunities for CDSL Insurance Repository Limited. Now, the total recurring opportunity for repositories is pegged at almost 313 crores as per HDFC Securities, and CDSL's subsidiary with a nearly 10% market share can derive incremental revenue of almost 31 crores. The other trigger is that the market-linked revenue for the company, which accounted for nearly 60% of the company's revenue, has recovered strongly after witnessing a dip of almost 21% in FY23. In fact, they expect that market-linked revenue could register a 16% CAGR over FY24 to 26. Annuity revenue, which is the third trigger for the company, accounts for for nearly 40% of the revenues, has registered a nearly 44% CAGR over the last 3 years. And in fact, given this insurance opportunity, they're expecting a further boost out here as well. So given that opportunity, annuity revenue stream could actually grow at a CAGR of almost 28% over the next 2 years, and could actually reach a revenue share of almost 45% in FY26. Overall, given all of these factors, they've gone ahead and increased their EPS estimates by nearly 7% for FY25 and 9% for FY26. And this has largely been driven by a revenue CAGR expectation of almost 21% and an adjusted CAGR expectation of almost 23% from FY24 to 26. So given all of those factors, HDFC Securities has given a thumbs up to CDSL, maintained their buy rating, target price of 2,360 rupees per share.
Well, thank you so much for that, Vamakshi. The stock's doing very well in the session on good volumes as well. But one sector that's doing really well in the session today are specific stocks, specifically when you're talking about the healthcare, the pharma, the diagnostics space. So focus now is on Metropolis. Ekta, you've been tracking the stock doing quite well after the Q4 operational update.
Well, yes, Metropolis is in focus because, the revenue growth, they've said that their revenue growth was around 10% in their Q4 update. Despite a prolonged holiday in March 2024, the core business, which is basically X of PPE or public-private partnership as well as COVID, that grew approximately 15% in Q4. Core revenue growth was driven by volume growth of approximately 8%, revenue per patient growth of around 7%. The B2C, which is basically the retail segment, grew at around 18%. Competition intensity is easing according to them in the past 6 to 12 months. Margin rise is due to a boost in volumes as well as price increase. And they've also repaid debt, hence they become debt-free. And that's the reason you're seeing the stock up around 3.5%. And that's percolated down to others such as Dr. Lal's as well, which is buzzing today.
Thank you so much for that. The diagnostic space is doing well. Like you mentioned, competitive intensity is easing. Price hikes also being taken by some of the players. But let's now shift focus to PNB Housing Finance, as its ratings have been upgraded to a AA+ from a AA rating by Care Ratings, with a stable outlook from an earlier positive stance. Earlier today, we spoke to Girish Kaskaugi, the MD and CEO of PNB Housing Finance, to discuss this and also the company's outlook going forward. Let's listen in to what he had to say.
I think because of the rating upgrade, not just rating upgrade, because rating upgrade is result of many financial metrics improving. So we definitely foresee reduction in cost of funds, could be 15-20 bips in the next few quarters. I think growth on the retail book is not in single digit, it is in double digit. I think the growth on affordable is much, much higher. I think it's more than 25-28% quarter on quarter. I think both in terms of disbursement as well as in terms of book. So going forward on the growth side, we would again look at about around 17% on the book. OPEX to ATA is about 85 to 90 bips. I think it could peak to about 100 bips and then it will start slowly coming down. So it will be around 95 to 100.
Okay, we need to take a short break now, but we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to CNBC-TV18.com. We'll see you on the 11th of May.
Welcome back to Midcap Radar. It's now time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Ekta is asked to tell us, how Q4 is expected to be for the pharma sector. Ekta, you've been talking about the pharma sector for quite some time. Today, quite a lot of initiating coverage notes. The sector is in focus. So what is it that you are expecting in this particular quarter?
Well, overall for the pharma space this quarter, pharma companies are likely to report a healthy 12 to 14% year-on-year growth and as much as a 26 to 27% EBITDA growth, led by a steady quarter in the US, offsetting seasonally weak domestic market. The US markets could grow as much as 22% on a year-on-year basis, which is higher than the four-quarter average growth of 17 to 18%. Aided by easing price pressure and sales of key drugs, especially continued sales from the blockbuster cancer drug Revlimid generic. Company-wise, in the US, Dr. Reddy's could see a 5% Q-on-Q US growth led by over $100 million from Revlimid generic and aided by the integration of main portfolio. Zydus could see an over 20% Q-on-Q US growth led by Revlimid generic that could be as much as $50 billion in terms of contribution. Cipla sales could be tempered due to a loss of market share in the inhaler drug albuterol. Sun Pharma could see 2% Q-on-Q growth in the US led by specialty portfolio of drugs which has been doing well in the past couple of quarters. Lupin will benefit from the inhaler Spiriva generic driving a 4% Q-on-Q growth in the US. Domestic market is likely to grow around 10 to 11% for the industry driven by sales of chronic drugs and a recovery in acute therapy drugs. JB Chemicals and Mankind are likely to outperform with an over 20 to 25% growth in the domestic market. Margins will be aided by niche products in the US and lower operational costs. Estimates are margins could expand by as much as over 250 basis points. Watch for higher CDMO sales, Q-on-Q pushing up earnings for both Divi's as well as Laurus Labs. Margin improvement and commentary will be key for both these companies as the street will watch for cues on big orders from MNCs and progress on opportunities such as GLP-1 drugs. Lastly, talking about commentary, watch for an update on US pricing from Aurobindo and others, pending US FTA issues from Cipla, Sun Pharma, Biocon, and commentary on fundraising from the likes of Biocon. Let's leave you with the valuations.
Thank you so much for that, Ekta. Very interesting insight, going into the earnings season. Let's look at a couple of stocks in the session, a couple of stocks that have moved quite sharply in the session. First up on your screen, PB Fintech. PB Fintech in the last couple of trading sessions actually was doing quite well. There was some positive news flow that came in for the company after it had ICICI Lombard onboarded onto its particular platform. But that particular stock today, have a look at it, down over 5%. The second stock that we want to highlight is Spark, Sun Pharma Advanced. On Wednesday, we had highlighted, how the company had faced a bit of a disappointment when it came to one particular drug, to treat Parkinson's. Today, down another 5%. PSP projects, no fresh developments over there, but that particular stock today down almost 7.5% on strong volumes. And we'll also keep an eye out today on Aster DM. People have been waiting, for the special dividend announcement to be made. So that stock too is on the radar. But let's now get you an important conversation. Our colleague Parikshit caught up with R. Dinesh, the president, and started off with the growth forecast for FY25. They also discussed simplification of the GST structure.
We are actually looking at FY25 as around 7.6% or above 7.5% rate of growth. But if you look at the survey which we run with our members, the feedback we have got from more than about 70% of them is that they expect the H1 of FY25 to be better than the H2 of FY24. If you look at it from a fundamental perspective and I would call it the focus on the infrastructure, physical, digital, and therefore the reduction in the cost of doing business and making India more competitive. And last but not the least, the discussions we have had whenever we have gone abroad as a CII team to meet with companies and who are looking at investing in India, and those who are invested in India looking at growth for further expansion of their activities is quite significant. Yes, but I would say a single rate may be difficult at a very quick speed. So for us, I think we have always recommended that it should have no more than 3. And that's something which will help kind of make it even more better if we can get it to 2. So I think that is simplification of the GST structure is a very important agenda point which we also mentioned has to be taken up post the elections.
Okay, well, that's the word coming in. Well, for the markets, like we've been pointing out, it's, quite unchanged from the last time we checked. So we have the Nifty, which is still down around 186 odd points. Sensex has accelerated in terms of losses, so down over 650 odd points. Let's see. Seems as though the end of the week will be a bit weak for us. Remember that we do have the India CPI and IIP data, which will be out post-market, so that'll be important to watch as well. It's all the time that we have on Midcap Radar. Your stocks once we're back. Stay tuned.